All right, let's dive into the world of LT Foods Ltd. This Indian company, they're really making waves in the rice market. And we're going to break down their whole journey using these really great insights we got from Screener. We're talking about financials, key metrics, competitor comparisons, the whole nine yards. It's going to be a fascinating deep dive, especially when we get to some of the details about their profit growth and how their brands are just like taking over the market.
Yeah, LT Foods, they have a history that goes all the way back to the 1980s. They started small, and they evolved into a major player in the rice processing and marketing world. But they haven't just stuck to the basics.
You're right. They're not just selling bags of rice. We've
Yeah.
got Zal, Royal, Heritage, Devaya, Gold Seal, Indus Valley, 817 Elephant, Kari Kari, Eco Life. It's like a whole rice empire.
Yeah.
And it's not just branded. They've got a non-branded basmati rice operation going too. Plus, their subsidiary, Nature Biofoods Limited, or NBFL, that's taking them into the world of value-added products and organic ingredients.
And you know what? Their brands aren't just sitting on shelves. They're actually commanding attention. In India, Dalwat has a 30% market share. That's huge. And then in North America, their Royal brand is leading the pack with a 50% share. That kind of market presence has to have some pretty big implications.
Absolutely. It's not just a coincidence. Our screener report shows that LT Foods has been delivering some really strong results. A profit growth of 35.8% CAGR, compound annual growth rate, over the last 5 years. That's the kind of growth that investors dream about. But before we get too excited, there's something else we need to consider. A potential issue with their promoter holding.
Yeah, it's true. The promoter holding has decreased by 5.81% over the last 3 years. And that definitely raises some questions. What does it tell us about where the company might be heading? Is it a temporary thing, or is it something more serious? It's a bit of a mystery.
A mystery, okay. I love a good puzzle. So before we get too lost in the details, let's zoom out and get a little context. Screener's peer comparison section shows us that LT Foods is part of the FMCG sector. That's fast-moving consumer goods. Specifically, they're under the food processing Indian industry. They're also listed in some indices like BSE Fast-Moving Consumer Goods, BSE Small Cap, and Nifty Microcap 250. Those are groups of companies that share certain characteristics and are often tracked together.
Right. Being in that FMCG category means they're dealing with products that sell really quickly, which is great for cash flow. And being in those indices, well, that can give investors some really good benchmarks for comparison. They can see how LT Foods is doing compared to similar companies and within those specific market segments.
Okay, so let's get into the financials. Screener gives us all the quarterly and annual figures. I'm really interested in the operating profit, margins, tax percentages, EPS, and dividend payouts. These are the numbers that really tell us how the company is performing.
Oh, absolutely. These figures are like a company's vital signs. They give us clues about the company's financial health. And there's a lot to unpack here. For example, their operating profit has been growing steadily, which is usually a good sign. But we're also seeing changes in their margins and tax percentages.
Yeah.
That suggests there are external things happening that we need to investigate.
So things are looking good on the surface, but there are always deeper layers, right? Now, what about those company announcements?
Oh, yes. They're making some big moves. Their expansion into Saudi Arabia with that SAR 185 million Naman investment, that's particularly interesting. It could have a major impact on their growth.
And they're launching Dalwat Jasmine Thai rice in India. Seems like a smart move to me, tapping into a whole new group of customers.
Absolutely. These are really strategic initiatives. It shows that LT Foods isn't just complacent. They're actively looking for new ways to grow and dominate the market. It really makes you think, how will these decisions shape the future of the company? And maybe even the rice market itself.
It's like throwing a stone in a pond. We're about to see all the ripples spread out.
Exactly. So let's continue our deep dive and explore those ripples, shall we?
Okay, those ripples we talked about. Let's take a closer look at a couple of them. First, that expansion into Saudi Arabia, SAR 185 million, that's a serious investment. What's the strategy there?
It's a bold move, that's for sure. It seems like LT Foods is looking beyond their current markets, aiming for a bigger piece of the global rice market. The Middle East, especially Saudi Arabia, has a growing demand for rice, and LT Foods wants to be a part of that.
It makes sense to go where the customers are, but what's driving that demand in the region? Is it just population growth?
Well, population growth is definitely a factor, but there's more to it. Changing dietary habits and even government policies play a role. Rice is a staple food in a lot of Middle Eastern countries, and those governments want to ensure a steady supply. By setting up shop in Saudi Arabia, LT Foods is positioning itself as a reliable source. They could potentially avoid export barriers and gain a real advantage in the region.
So they're not just selling rice, they're becoming a strategic partner. Speaking of strategy, let's talk about that Dawadi jasmine Thai rice launch in India. It seems like a pretty smart move, catering to changing tastes.
It is. It's smart on a few different levels. Jasmine rice, known for its fragrance and texture, is really popular in Asian cuisine, and it's gaining popularity in India. LT Foods is using their established Dawawat brand to introduce this variety to a new segment of the Indian market. They're really leveraging their brand recognition and their distribution network.
So instead of starting a new brand, they're expanding an existing one. Clever. But it's not all easy, right? Launching a new product always has challenges.
Yeah, of course. They're going to face competition from companies already selling jasmine rice. And consumer education is another hurdle. They'll need to explain the unique qualities of Dawat jasmine Thai rice and what makes it different from the competition.
It's a whole new marketing challenge. How do you get people to try something new when they already have their favorite brands?
Exactly. They need a story that connects with people, something that convinces them to choose Dawat over other options. But remember, LT Foods has been successful at building brands before. They made Dawat a household name in India's basmati rice market, so they know how to overcome these challenges.
Okay, so we've got this ambitious expansion into a new market, a smart product launch targeting changing tastes, a company with a history of strong performance, and yet that promoter holding decrease still bothers me a little. Am I overthinking it, or is that a red flag?
It's definitely something worth looking into. We're trying to put all the pieces together here. On one hand, LT Foods is making bold moves, they're doing well financially, and they seem to understand market trends. But then we have this decrease in promoter holding, which could mean a change in their confidence or their long-term vision for the company.
It's like a detective story. We have clues, but they don't all make sense yet. We need more information.
Right. So let's look at the financial data. Maybe the ratio section of the screener report can give us some answers. What do you see there?
Well, their debtor days, inventory days, and days payable have all been changing, but they're generally going down in recent years. Now, for those who don't know, debtor days is how long it takes a company to get paid by its customers. Inventory days is how long inventory sits in the warehouse before it's sold. And days payable is how long it takes the company to pay its suppliers.
That's a great explanation. And the fact that those numbers are going down, it suggests that LT Foods is getting better at managing its working capital. They're getting paid faster, selling inventory quicker, and maybe even getting better payment terms from suppliers. All of that points to a healthier cash flow, which is good for the company's overall financial health.
So, more efficiency, better cash flow, that sounds good. But how does it connect to the promoter holding situation?
Well, if LT Foods is becoming more financially stable, maybe the promoters are confident about the future, and they see this as a good time to diversify their own investments. So instead of a warning sign, this decrease in promoter holding could actually show their trust in the company. They might be thinking, the company's doing great, let's invest in some other things too.
So they're not losing faith in LT Foods, they're just being smart investors, taking advantage of the company's success to diversify. That makes more sense now. But there's one more thing I want to look at. The impact of LT Foods' actions on the entire rice market.
That's an important point. LT Foods isn't operating in isolation. Their growth and decisions are affecting the whole industry, especially as they move into new areas like Saudi Arabia. The competition is definitely getting more intense.
So they're shaking things up, which is good for consumers, right? More competition usually means better prices and more choices.
That's often true. But it also puts pressure on other companies in the market. LT Foods' aggressive strategy might force other rice producers to improve. We could see price wars, new innovations, maybe even mergers as companies try to stay competitive.
It's like LT Foods is challenging the whole industry to adapt.
Exactly. And this isn't just happening in the rice market. We see it in other industries too. Companies that are proactive, innovative, and strategic are the ones shaping the future.
And LT Foods seems to fit that description. They're not just along for the ride, they're driving the change. We've come a long way in understanding LT Foods, from their strategies to their impact on the world.
It's amazing what you can learn when you really analyze a company. But remember, we've only just scratched the surface. There's still a lot more to discover.
And that's what makes it so exciting. This deep dive has given us the knowledge to keep exploring LT Foods on our own. Now it's your turn to look at the financial statements. Read the company announcements and draw your own conclusions.
And as you do that, here's something to think about. We talked about LT Foods' ambition, their ability to adapt, their pursuit of growth. But what about the human side of all this? What does their expansion mean for the farmers, workers, and consumers involved in producing and selling rice. It's a question worth considering.
It's a good reminder that behind all the numbers and strategies, there are real people whose lives are affected by these decisions. And with that, we'll leave you to think about the complexities of LT Foods and the global rice market. Until next time, happy exploring. So we've covered a ton about LT Foods, their market share, their expansion, new products, even their financials. But there's one thing we haven't fully explained, that decrease in promoter holding. It's been kind of a mystery hanging over our conversation.
You're right. We need to take a closer look at that. We've talked about a few possible explanations, but I think we can get more insight from some of the numbers. Let's look at those key financial ratios from our screener report.
Okay, let's see. We've got return on equity, ROE, return on capital employed, ROCE, debt to equity ratio, and a few others. What should we focus on?
Well, ROE and RCE. Those are really good indicators of a company's profitability and how well they use their resources. Higher ROE and ROCE usually mean the company is making good money for its investors.
Okay, so looking here, LT Foods' ROE and ROCE have been going up and down over the last few years, some dips, but they seem to be trending upwards recently. What does that tell us?
It suggests that their profitability has been a bit volatile, but things are looking up. Could be a few reasons for that, like maybe they got better at running their operations.
Or managed costs better.
Right. Or even had some really successful product launches.
So some ups and downs, but they're moving in the right direction. That's good for investors, right?
Definitely. A positive trend in ROE and ROCE means the company is getting more efficient and profitable, which could mean more value for shareholders in the long run.
Now, what about that debt to equity ratio? I know it's important for understanding a company's financial health, but I'm not always sure what it means.
It's a key indicator of financial leverage. It tells us how much debt a company is using compared to the equity from its shareholders. A higher ratio means they're using more debt, which can be riskier.
Okay, so for LT Foods, their debt-to-equity ratio has been pretty stable, around 0.6 to 0.7 over the last few years. Is that good or bad?
A debt-to-equity ratio around that level, it's generally considered healthy for a company like LT Foods. It means they're using some debt to grow, but not too much that it becomes a problem.
So looking at everything, it seems like LT Foods is in a pretty good financial position. They're getting more profitable, managing their debt well, and making strategic moves to expand.
Exactly. And this could be the missing piece of the puzzle when we think about that decrease in promoter holding.
Oh, right. So if the company's doing well financially, maybe the promoters are just diversifying their investments, not selling off their shares because they're worried about LT Foods.
Exactly. They might be thinking, hey, our investment is doing great. Let's put some of that money into other things. It's a pretty common thing for smart investors to do. Diversify to manage risk and make more money.
It makes sense. They're not abandoning LT Foods. They're just making smart financial decisions. And knowing what we know about how well the company is doing, it seems like a pretty reasonable move.
I agree. And we have to remember, we're looking at this from the outside. The promoters probably have more information that we don't.
That's true. We're putting the pieces together as best we can, but there might be some information we don't have. But even with what we've learned, it's been a really interesting journey. We've learned a lot about LT Foods, their strategies, their challenges, their impact on the global rice market.
Absolutely. That's what's great about these deep dives. It's not just about finding answers. It's about asking the right questions, challenging what we think we know, looking at the data, and coming away with a much better understanding of the company.
And now it's your turn. We've given you the tools to dig deeper into LT Foods and the rice market.
This is just the beginning. There's always more to learn. As you explore, think about how LT Foods is impacting the world. How are they changing the rice industry? How are they contributing to the global food supply? What does it mean for the farmers, workers, and people who eat rice?
It's a good reminder that these business decisions aren't just numbers. They affect real people and communities. We hope this deep dive has made you curious and inspired you to keep learning about the business world. Until next time, happy exploring.